When we're afraid, the emotional discomfort we feel in the moment is so real that it's beyond.
What up, y'all? Can y'all hear me?
Hey. Yep.
What's up? What's up?
What's good, Corey?
How y'all doing today?
I'm doing great. I made it.
All right, so I'm gonna go over the trades I took, news setups I took last week, and then I'll go over the pairs that I'm gonna be looking at for this week, and kind of like go over like how I think about it and how I traded the news and like what I'm looking for when I trade the news. So I'll start with what I start with. So like when I'm looking at the news, this is my first place I go. I don't even open up the charts and until I look and see what my red folders and orange folders are, what kind of news that I have. So like when I'm looking at the Forex Factory, like of course the red folders stand out, and like they stand out because they're economic news, and it's economic news that moves the market. And basically in turn what I'm trading is the volatility of the market. Like on those particular days, the market will be liquid. There'll be a lot of volume, there'll be a lot of traders in the market because they're seeing these releases, these particular the economic news for that particular country. So on these days, what I do is, if you're looking at Forex Factory, you can see like the details of what this is. So this is retail sales. This is Australian Bureau of Statistics, and it's a lot of work done before you actually get to the charts. And the work done before you get to the charts kind of helps you to prep for when you actually go to the chart. So like I figure out what I'm going to trade based off of what this information tells me. So like for this week, last week, looking at, I think I traded, let me look back at my notes. I traded EEA on this day and GA on this day, right? And so before I realized that those were the two pairs that I was going to trade, I went onto my chart. So these January 10th, right? Let's pull that up. So we got Aussie pairs, right? So we're going to look at Euro AUD. And so what I was noticing on these particular time frames are, the first thing that I'm gonna do is I'll mark up my chart, but I'll put in my support resistance, make sure that I know it, and that is important, of course, because you got to know where you're going. And then I'll usually just mark it up. This isn't where I really mark it up so much, but I just kind of want to get an idea of where it could possibly go. Hang on. And then we got here. So I'm marking my charts, and I'm starting from scratch, so you can kind of see the whole process of the way I think about it. And I just want to thank Kim because she put us on this, but I just kind of switched some things on it, and it's been really, really helping me out. So this from a weekly view, those are my zones right here. I'm going to go to the daily, and the daily is the most important chart for me when I'm trading news, because I'm looking at the reaction of those particular days. So I use that to determine where I'm going to trade and how many pips I'm looking at, or which pair I should trade in the first place. And the things that I look for when I'm trading news, of course, is the red folder. I'm looking for the news on the days for these previous days that we are considering the trade. And that's where the daily comes into place. So on my chart, now that I got the daily in, we can go back to our Forex Factor. And this particular news release is the retail news release, right? So it has an impact, right? So we see that on the previous was 0.5 and the forecast is at 0%. And then the actual was at a negative 0.1. This affected the market negatively for this particular news release, right? You also have some other news on this particular pair, but I don't really concern with the speeches or statements so much. But I mean, I do, but mostly I'm looking for is economic data, because the economic data drives the market in the first place. So, and usually the speeches, they will have an effect, but they don't have the immediate reaction. And with the news trades, I don't really, I got some things that I'm going to add into it to consider that. But for right now, I'm just looking for a 5-minute to 10-minute trade and I'm out. So that way I can take the full effect of the market movement at that time. So we'll look at the retail for January 10th, right? So on January 10th, right? Let me delete, I don't need this. January 10th. Let's see what happened on January 10th. January 10th, here is a good sign, right? So on the 10th, the market moved for 155 pips, right? That's how far the market moved on January 10th for this particular pair. So I'm going to note that, right, on my chart. Note that. And I'm going to note why it reacted. So those are CLs, right? And you're doing this because you can use this for later information. Like you can use this for the next time retail sales come out. You already know that the next time retail sales comes out, that this particular pair could move 155 pips, right? And so I note that, right? Grabbing this on this date, noting that this on January 10th, that's what it did, and this was a negative, right? And so let's see what else it did on January 10th. What else caused this to move on January 10th? We had retail sales, we had trade balance. That's an orange folder. Last time that came out was January 7th. We'll go look at that later. This dude's statement, we'll look at that later. Cash, we'll look at that later. So we already know that so far on the 10th, this moved 155 pips. All right. And now that we know that, we can go back and see again, like what did it do on December 5th when it came out the last time? When it was released on December 5th, we have right here. Look at this huge wick. Huge candle right here on the daily. That's another candle. And this is coming from a support level too. So this is even stronger. This moved 202 pips, right? This moved 202 pips. So we're going to note that, right? This was, again, retail sales that caused this on the 5th of December. So you kind of getting the idea, this is like telling you trade me right now, right? This is telling you to trade me. Like, this is saying, like, this one moved 155 pips. No, wait, that was the last one. This one moved what? This one moved 202 pips. Yeah, 202. So this one moved 202. And the other one was 155, right? This one moved 155. Total pips, 155. All right. So, and we'll repeat that again when it was released. I try to go like 6 months to a year back. It just depends on how far the numbers fluctuate. If the numbers are like basically around the same, then I'll just stick with 6 months back, or I'll go back to a year if I have a range from like that's like really skewed. So like if I'm looking at a pair that fluctuated between 100 pips, yeah, I'm recording it, Prescott. I'm recording it. So if I'm looking at a pair that is between like 100 and 200 pips, 6 months is probably enough information. But if you got a pair that move from a range from like 33 pips to 100 pips or 33 pips to like 200 pips, then you gotta consider like what is done more on more days, because you have to take into consideration that range of motion or range of volatility is it's off a little bit. So again, we'll look at November 1st. November 1st is over here. Let me move this. November 1st is probably this candle. Wow. So we know we have another move for 169 pips, right? Repeat the process. So this is November 1st. We are going to add that date, right? And this one looking good. Like this is looking like it's a good pair to trade when we have retail sales, right? Because we have confirmations for this particular movement in the market on this day. And I can't remember, what was that, 169 pips, right? That was 169 pips? I can't remember. No, nobody? All right, I'll measure it again. I think that was, I can't even see it. All right, so 163 pips. All right, so total pips 163. 163. And this was retail sales as well. All right. And then we got 3. So let's go back in October the 10th. October the 4th. October the 4th, what we got? We got 10-4. Another beautiful setup that's actually reacting to a support, a resistance level. Sorry. This is a daily resistance level right here. So we're gonna add that in. Daily zone right here, and this candle on what is this? October 4th. That's what that was. Yep. This candle October 4th is going zone to zone right here. So we got another confirmation. Not only do we have the news, but we have it reacted off of the zone. That's for 135 pips. So we got another confirmation. Retail sales. Yeah. Right. And this was 135, right? I don't know why I keep forgetting it, what I'm putting in there, but measure it again. 132. So I can keep going. I'm gonna keep going only because I want to mark this up for the long run, so I can come back to this if I need to. But if you kind of can see where I'm going with this, just you can kind of see where I'm going with this. This so far has a range of movement between 132 pips to 202 pips. When I'm trading the news, all I want to get is 20 pips though. But the thing is, I stack my trade. So yeah, I got 20 pips out of the move, but I might stack it with 4 different trades. So altogether, I got 100 pips out of a 5-minute or 10-minute trade. When I know that that the market is going to move in a particular direction. So let me just do this last date on here. September, hang on. Let me just get September date right quick. And that'll be the last one. September the 2nd. September 2nd. Right here. Oh, September 2nd, right? Wait a minute. September 2nd? Okay. All right. So this look like it came out. Was September the 2nd a weekend? Is that on the weekend? I don't see September 2nd was on the weekend. Yep, that was on a Sunday. So since that was on a Sunday, I don't think that it's pulling up for some reason. I don't see Sunday on here. 9/2, 9/3, 31. Oh, that's weird. So let me see if it's on MetaTrader. We'll just note that somewhere on the chart because I don't see it on here. It's probably on MetaTrader. It'll probably show on there. I'm pretty sure that it'll show on there. But let me open that up just to see if I'm not going crazy. Wow, that's opening up on the other screen. Retail sales. And let's see where is my MetaTrader? Why are you taking long to open up? Sorry about that. Sorry about this. Just give me a second. I'm trying to pull it up and it's just taking a long time. Weird. It's not working with me right now. All right. I'm just gonna go to my other computer and get the information. Okay, so it happened over the weekend, and regardless, it happened over the weekend. I don't have the numbers for that one for that date, so let's just use one more date just to kind of confirm. August 2nd. We'll use August 2nd, and it's fine. August 2nd. Just right here, August 2nd. So didn't really move August 2nd, but that's okay. It only went for about 65 pips, which is okay. That's decent, but still like to see it to, I'd still like to see it close to the range that it normally trades at on that day. So let's see, it's total of 65 pips, right? So for EA, we know that we have a range between 65 and 202 pips, right? So we know, plus we know now that we're nearing a resistance level right here, and we have two zones above and below us, right? You got this zone right here. We got this zone right here that's below where current price is right now. So if you look at it and you notice each time that it's another zone right here. Let me see, another support resistance level right here, and it's on the daily, right? You'll notice that each time that the market reacts to news, it tries to react to it reacts to the news. It moves from one zone to another zone, right? So let me add this one last level in here. If we go back, we got this, we got price reacting from, sorry. If we go back to January 10th, price reacted from this zone to this zone right here. That was for 155 pips. On this day, December 4th, we got price reacting for 202 pips, zone to zone. On this day, where are we? On November 1st. On November 1st, we reacted zone to zone. So the move, so you can see the news drive the price from one zone to the next zone. And that's all we looking for in taking the news trades is a 20 to 30, 20 to 40, however you particularly want to take the trade. And the reason why I look for those trades, those pairs with a higher range of movement is because it's more likely for me to get 20 pips or 40 pips when I know the market can move 202 pips, right? So that's why I look for these kind of numbers when I'm looking for my trade setups. So I'm more likely to get those 20 to 30 pips or 20 to 40 pips if I see that the market will move between 200 or 100 or 132 pips in one day. If I see that, then I know that if I put in my trade whenever the news is about to release, that I should more than likely get my trade to close out in profit with the 20 pips or the 40 pips that I set my my take profit for. And so, and you also have other confirmations with this movement as well. You got a harmonic pattern set up right here. You got a downtrending. What do you call this? A bat. I think this is Batman, as Oren would say. This is Batman right here. You got confirmation here that if you would take a ABCDX trade, ABC to CD trade right here, you can see this. If the news is negative, you would take the D trade right here and to the next zone. Or you can push up here and you still have the same setup. That was crazy. I think that was crazy. So on these particular trades, that's all I'm looking for. And when I'm actually ready to take the trade, so let's say on we had this news come out on Monday the 4th, right? And so Monday the 4th was, wait a minute. Yeah, February 4th, right? This was February 4th, right? And I don't think that it moved a lot on this one, but took it anyway. And I still got my pips, right? So this one moved 58 points on that day, right? So when this is probably an example of one I might, this is like a B setup, a B or a C setup right here, because this one has a wider range. So like on the 4th, this one only moved 58 pips. And then, so we'll annotate that here. Only moved like 58 pips on that day. And then that was reacting to retail news, right? So I think I still took it, but like that trade kind of struggled a little bit, but I still took it and I ended up making my profit. But it kind of lingered when the news came out. So it didn't move immediately the way that I would like for it to see it move. But there's another trade set up that I'm gonna go over that moved instantly. Like it had the same criteria that I like to see when I'm trading the news. So this is just one we went over that I'm going over from last week. So this was EA, and I'm gonna publish this one so you guys can see it later. EA news setup. February 4th. I'll add the details later. Right, Cam. That's the next thing I was about to talk about. So, like when I'm actually setting up for the trade, this is all prep work. This is not like actually taking the trade. This is just the prep work before the trade. And this is what I do before I consider what I'm going to trade. I use this to like look for the pairs that I'll actually be taking the trades on. And so once I'm actually ready to decide that this is a pair that I'm going to trade, right? EA is a pair I'm going to trade. I switch to the 5-minute chart. And 5-minute chart on the 4th will look like this. Where are we on the 4th? Where are we? All right. So the news came out at 7:30 p.m. Sorry. 7:30 p.m. EST. So this is February 4th. All right. So this looks like the candles that broke on the news release. You got all the volume in the world right here. That candle has the volume. So what I'm doing before the trade, so like maybe 30 minutes out, 30 to 40 minutes out, I set up my pending orders on the trade, right? And based off of what I'm seeing prior to, so here, this is the 7:30 news release right here. This is 30 minutes before. So what I do is I take and I find the zone. I box this price off right here. This price, I box it off, right? Where is this box? Right here, right? And this is where I trade off of, right? And sometimes you don't get something clean like this, right? But I'll take this box and I'll use this wick. I'll use a wick. I find a wick low, which is right here. Well, let me remove this box right quick. So I find the wick low. This is the lowest wick right here. And I measure between 10 to 20 pips down, right? This is 20 pips right here. That's why I place my pending stop order for a sale, right? I place my sale order right here, so I know that it has to come down 20 pips before it pulls me in the trade. And I would set it anywhere between 10 to 20 pips. It has to take me in. Same thing on the upside. This one, 20 pips. Like I said, this one didn't go clean, but I still came out in profit though, because I think I only set this one to like 15 pips or 10 pips. It pulled me into the trade right here, and I got, what is that? From there, from around here, I took 15, 16 pips, and it stopped. I had to manually stop myself out of these trades. But that's why I don't like to have a wide range. Like when I see that in the past 6 months to a year that the pair moved between, like, you know, like I said, 200 pips on average, and then on a couple of days it went to like 65, that kind of throws me off. But I'm going to show you a better setup that you could take with more confidence. And the setup that I'm looking for on this week, that one, it meets more of my criteria that I'm looking for when I'm taking the news trades. So on GCAD, right? So GCAD is
nice move.
Nice one. GCAD is nice. The GCAD meets all the criteria of what we need to look for when we take in a news trade. Every day for the past, every time these news releases came out, we got 297 pips, we got 206, we got 103, we got 223, we got 177, and we got 137. That means that out of those days, I am guaranteed, nothing's guaranteed. I'll reiterate that. Nothing's guaranteed, but the statistics are higher to say that this will move at least 100 pips, right? Over the last 6 months, we've had this pair move those at least 100 pips, right? We had this one attempting that reacted off of this zone. We had this one moving reacting off of zones right here. We had this one reacting off of a zone. This one reacting off of a zone. This one, same thing, zone to zone each time. And now, look where price is right now. We're near this weekly level right here, which is basically a weekly zone right here. And I can move to this daily zone, or I can move to this weekly zone if it moves up. If it moves down, guess where I can go? I can go to this weekly zone or this weekly zone because of the fact that I have a 297 pip I have a range from 100 to 297 pips that this pair could possibly move. So GCAD is going to be probably the main trade that I take on Monday. And over the weekend, I just map out the whole week. Like, let me go back to this week. So this week, I just mapped out like, all right, I know Monday, I'm taking GCAD. Tuesday, I'm taking NZD because guess what kind of news this is? I'm taking NZD trades. I haven't mapped that one out yet, but another good setup was like a B setup. This was GBP Euro. GBP Euro had a kind of an off range too because you had 36 pip to 188 pip. So that one kind of didn't meet all the requirements, but could I trade it? Yes. Would I probably let my I would probably manually close out these trades instead of letting it hit my TP. So, because I don't want to get wicked out on a 37 pip move. I'm trying to get 20 pips and it may not go all the way because of that. But this is actually probably a C setup. So I wouldn't probably trade that one too much. But so because I know I got news on GBP pairs, I'm just scrolling through the news. I'm scrolling that's when I actually go to my charts and look for which pair I'm going to trade. Because on the GBP pairs, I want to see which pair has the highest range and the most consistent range. And for my case, I saw that the GBP CAD pair was the best one. But here's another one. This is another one that is I will probably trade JPY too, because GBP JPY, that moves anyway. We already know GBP JPY moves. And on the weekly, let me see. I probably, without even knowing which days these are, I can probably look to see like, all right, this was November 1st. We just saw that on November 1st. Let me see. GBP, we got gross domestic news. That's you can read what this is. Gross domestic product. This changes the total value of goods and services produced by this economy. Powerful news, right? You got manufacturing news. Powerful news. This tells what happens with this economy. Same thing. Prelims for the GDP news. Powerful news. When I see like speeches, sometimes I take them into consideration. Sometimes I do. But I don't do it most of the time because of the fact that you just don't know. It leaves you without hard evidence. Like I can't go back and see the numbers for a speech. I would have to just literally look back at the chart. So I don't consider news so much when it revolves around a speech, unless it's something like the Brexit. Brexit, that speech, that vote that came out, that was high impact news. That was something that would affect the economy. But if you look back at some of the speeches on the speech dates, those kind of left you with some with information that wasn't defining enough to actually take a trade off of it for me. So Tuesday, I probably would not mess with the GBP pairs. I would be looking at the NZD pairs in the evening and on Tuesday because we have economic news. We got official cash rate. We got the inflation expectations. And then the other two red folders, those are statements. Those are not they involve economic data, but they don't necessarily have numeric defining information involved with it. It's a statement. It's basically a press release, you know. So that could go anyway. On Wednesday, I'm back on GBP pairs again, right? But guess what I already know? I already know that GBP moves, GBP CAD moves. I know GBP JPY moves. So those are the pairs that I'm gonna look for at 4:30 a.m. I'm gonna make sure I'm up at 3 or 3:30, you know, 3:30, and then right around 4 o'clock, I'm looking for my wick high, my wick lows to set my pending orders off of. And then once 4:30 hits, my plan is to be out of the trade with, I usually use 4 different pending orders. I use 4 buy stops, 4 sell stops, right? And I'll set 2 of them for 20 pips or 25 pips or 30 pips. So I'll automatically get those. And then I might set the third one at 40 pips or 50 pips. And I'll let that one go and pull me out of the trade on its own. And then the fourth order, I will usually keep that one in and try to hold that until I see, sometimes I'll try to hold it through the pullback. And then I'll try to let that one stop itself out whenever it's done. So that's how I kind of take advantage of this. And, you know, if I see the trade pulling back on its own and it's not moving immediately, I'll manually pull myself out. So that way I'm out of, I can pull myself out of the trade and make sure that I'm in profit. So these aren't trades that you are going to like just let ride. You know, these aren't put your stop loss in and then let those go. You know, these are trades you have to manually watch the screen for, and they shouldn't take long. That's another thing. That's why I don't like to trade the speeches and the statement releases, because those could take 30 minutes or an hour, or they could react 20 minutes later, you know, because in those cases, you're reacting to what someone's saying in a speech, when what the important part of the speech could come an hour after the news was scheduled to release. You know, the speech starts at 8 a.m. It could go on for a 2-hour speech, and then he might not say anything that's relevant until 9:45. So you're just sitting around holding. You're sitting around holding, and you want to make sure that you're in and out of these kind of trades, because you don't want him to say one great thing at the beginning of the speech and then say something totally conflicted and you get pulled out of the trade for a loss. So that was that pair. So if I'm trading NZD pairs, another thing I consider for trading the news is, I know that I'm going to be, when you're trading NZD pairs, you're trading into the Sydney session, right? So that's another thing to keep in mind, is in a lot of cases, trade pairs that you know are in session with the news, right? So NZD pairs, I can trade AUD NZD pair, that pair, because both of those markets are open. You have the most traders in the market at that time, and you know that you should have a lot of volatility at that time. You could trade AU, you could trade, I'm sorry, not AU, but NZD JPY. You could trade that pair. because the Asian market opens up at that time as well. So those are the pairs. You have that Sydney and Tokyo session crossover during that time. So in NZD trade for news, I would look for those markets to trade in because of the fact that that I know that those have a lot of volume at that time because you have the trader. But that's where you do your research. You know, that's where you go into the charts and you're looking for what pairs react the most to this particular news, and not just make the assumption that I should just trade NZD AUD, or I should just trade NZD JPY. Maybe I need to trade GBP NZD, or I don't even know if I said that. Is it GBP? Whatever. Maybe I should trade NU.
Yeah, GBP NZD it moves pretty good.
Right. So maybe I should trade that. So, and that's where your research comes into play. You're looking for these numbers that I showed you earlier. You're looking for the numbers, right? You're looking for the numbers. So GBP, JPY. And GBP JPY is in play on Monday, and it's in play again on Wednesday, right? And it's in play again on Friday. So we already know GCAD is good to go. We already know that, right? Because we got retail sales on Friday for GPB CAD. I can probably go back on these days right here. Let's see what this does. Let me refresh this. We already know we got GCAD, right? And GCAD, based off of retail sales release, is good to go. What's going on? Damn it. Can y'all hear me still?
So how do you put, like, when you're doing your sell stop and buy stop, do you do 10 pips above and below the wick for
Yep,
pending order?
10
Okay.
10 to 15, depending on the pair. Like, so because I know I got 20, because I know on GCAD, like GCAD Move 2 has a range of, I don't know what's going on with this. Hang on. GCAD, we already see GCAD has a range between, what I say, 103 to 297 pips. I'll put my stops in at probably 10 to 15 on this one because I can get in sooner, get out quicker. On a pair that I'm a little skeptic about, I'll usually move those a little higher. Like this one that I was mentioning earlier, this GBP Euro, because of the range, right? You see, it's 36 to 188. I don't want to get in this unless it's actually moving in the direction that it's going. So that's where I would use the larger stops. So I would use probably a 20 to 25, 20 to 30 pip stop because I want to make sure that I get in the move only if it's moving in that direction. And that's where what's going on with Forex Factor? Sorry, guys. I want to make sure that I get in the move for sure. So I'll go back to it, right? This was, let me pull up GPP, JPY, right? And let's just say this is when the 23rd news release. We were trading this news, whatever day that is, on the 23rd. Let's go there. Go to 23rd, 1-23. Here. All right. So we're here on the 23rd, right? All right. Let's just say I don't know if that was news, so let me try. Let's see. Hang on. What is up with Forex Factory?
Corey, I found myself like trailing my sell limit and my buy limits in
Yeah.
real time.
Yeah, I just I do it too. I manually do it myself. I just pull myself out of those trades. Like I don't put a sell stop in physically. I don't put the sell stop in my on the computer, but I'm watching the trades anyway. And if I see or I don't like the movement of the trade, I just pull myself out automatically. I just cancel those out. So you can do both. You know, put a sell stop in, so that way you have the sell stop, or you can just, because they don't last that long, you can do it yourself. And I don't recommend doing the twin trading on a phone. You know, I mean you can, but I think this setup kind of leans more towards trading from your computer, because that way you can get in for sure, get out. You can manage multiple ones without trying to click through, so many things on your phone. And you know, to me, it's just a little safer. So, dang. So it's not me. Anybody else can get into Forex Factory? Because it's not opening up on my computer. Or anybody
I'll
else?
check for you.
I know it's not my internet, because I
can't get in either.
Okay. All right. Cool. So that's strange, but all right. So let's just look at. All right. Let's look at this. I think I sent GCAD, GBP, JPY set up. Let me look at my phone right quick. Let me see. I think took a screenshot of the news. So February 11th is the date. All right. February 11th, right? All right. And I can't even see it now. That's no good. So let me see. Let me pull up this GCAD again and try to use this chart to tell me the days that that news came out. All right. So we're going to look at GBP, JPY based off of this GCAD setup, right? So we had news that came out on January 11th. So let's go daily, January 11th. January 11th is right here. We had a range of 181 pips, right? Good start. Good start, right? So that day, it's reacting to retail sales. Again, I can pull the data. I'm not gonna do it all right there. I'm just thorough on this kind of stuff, so I want to know why. I'll go back and put all the info in there. So this was 181 pips. 181 pips on what day, which is January 11th and 11, 2019. 2019, all right. So that's that day, right? But like I said, hang on, let me mark it up right quick. We got zoom out. All right. We got, let me just move this for now. GBP, JPY, right? You really only need one pair. Like you really only need one pair, because if you're twin trading, like you can make what you need off of the pair, off of that one pair. Like I'm setting up GBP, JPY, but will I trade it? Maybe not. Maybe not. Because I like the way GCAD looks. So GCAD looks great. So here go weekly support resistance. Here go another. This is my zone on that weekly. Zone here. We got another. I'll go to the daily for that. We got a low over here. Let's say here. All right, so we got our zones on the weekly. We already see we're moving in a downtrend, right? Moving in a downtrend on the weekly. And now let's switch to the daily. We got a zone over here, the daily, mirroring the zone right here. We got another one right here. And we got one right about the most recent one, about right here. All right, so we got enough information about the zones, right? This is coming from the daily. The counter trend, we got an uptrend on a counter trend, right? Got an uptrend. I'm going to use this body. And we got an uptrend, right? So we have price reacting to this trend line, moving up against the counter trend, right? So now we are going to look for our setups, right? So on the 11th, let me pull you back down here. Look for our range, right? We are on the 11th, right? We already see that on the 11th, we moved 181 pips, right? Sorry. Dang it, how is this? Let me just delete this. On the 11th, we got 181 pips, right? And let's find that 11th again. Right here, 181 pips. It's reacting to retail sales. Retail sales, again on the January the 11th, 181 pips. The next time the next date we had it react was December the 10th, right? Also GBP, JPY, December the 10th. Nice. Another reason why this is going to be a good trade. So this moved from this week low. Let me make sure I get it. This week low right here to this week high. That is 251 pips. Already good, right? We already see where this is going, right? 251 pips, retail sales. On December the 10th, 2018. 251 pips. 251 pips. All right. Zone to zone. Like it didn't make it all the way to this zone, but you got a minor swing point right here. You got a swing point. You made the swing point right here. So you can go from this body to here, and you see it's reacting to that right here. This is where price turned around before. You got a bullish engulfing candle right here. This, even though it doesn't look like it, you got the combine. You can combine these two candles, and this makes a bullish engulfing because you got this formation, and then you got your volume right here confirming that right here, that this is an important level where these two candles start, and the price reacted at these important levels right here. So you got this candle again reacting to news, reacting to the zones, reacting to this swing point, and you got to move down for 251. The next day we got, where is it again? November 9th. All right. November 9th. Where is my GBP again? November 9th. We have another trade here. Okay. Another little zone right here. There's another little level right here. Resistance level. I could draw this out right here. Price is already near a resistance level, and all it needed was that news to push it in the direction that it was gonna go anyway, right? So we got December the where was that again? That was November 9th, right? November 9th. Look at what price is reacting to. It's reacting to this daily level, daily support resistance level, and we had price move down from wick high to wick low here, 153 pips. Another good sign. So guess what? This is setting up like it's about to move, right? Retail sales drives GBP JPY on November the 9th. And the reason why, like I said, the reason why I'm doing it like this, what was that? What was that price again? I mean, how many pips was that? Nobody? All right, cool. Nobody got it? Anybody? Nobody? Okay, cool.
Sorry, I didn't see it.
It's all right, I'll measure it again. So 153. All right, 153 pips. So far, so good. This is one I would trade so far, because right now we got a 150 to 251 pip range, right? The next time, October 10th. October 10th is right here. This one was a small wick, but it reacted from a zone to two zone. October 10th, right? Yeah, that's what I said. October 10th. Okay. So we got this hammer insinuating a downtrend. On this hammer alone, dang, that's nice. Zone to zone, 128 pips. Even on this little hammer, like, look at this. This is not even, you would look at this candle and like just be like, oh, it didn't really move. But that moved 128 pips. 128 pips, retail sales on October 10th, 2018, 128 pips. All right. So we got 4 down. I'm going to do 2 more. 2 more dates because at least 6 months. September 10th. September 10th, we got this, probably it right here. Yep. We got another move of over 100 pips. This is 187. Jesus Christ, give me that. That's 190 pips. Yes. Yep. We gonna trade you for sure. We can trade you for sure. Still, retail sales driving this one. This is September. What was it? September 9th, I think. 2018. 190 pips. September. No, that was September. It's supposed to be September the 10th. My bad. September 10th. 190 pips. And the last one is August. And August the 10th as well. So August the 10th was this day, right here. Reacted off of this daily. It really reacted off of this weekly zone. But you got 162 pips. So GBP, JPY, GCAD, 2 in play. If you trade these 2 pairs using the new setup, you are probably going to be making a lot of money on that day if you trade it the right way. Trade it the right way, you will probably be making some money. I still forgot how many pips that was, but let me measure it. Trade it, 156. All right, so nice, 156 pips. All right, so we have a range from 128 to 251 pips that this pair could possibly move. So looks like we got a good setup. Like this is going to be a good setup on GBP JPY. And like once I'm ready to take the trade, let me move to the 11th just to show you again how we would actually set up the trade itself when we're ready to actually take the trade. Actually ready to take the trade. Oops. Actually ready to take the trade. Let me see. Go to the 11. Sorry. So 13. So this looks like it right here. Still kind of getting used to Trader View. Sorry. This one would be a little, this one would be one you would probably have to have had to manually get in and out of this one. Because you would have got in to it. Let's see. So this is around the time when the news released, right? This is the, let's see. Let me see, when was, I can't see because Forex Factory not working. I don't know what time the news actually dropped. Let's see, on the 11th. January 11th. It's retail sales on GDP JPY. Kind of threw me off. Sorry, guys. Okay, so that wasn't retail sales. That was gross domestic. So gross GDP release was on January 11th, right? And let's say that was at 4:30 a.m. Eastern Standard Time. So I think 4:30. What is 4:30 GMT time frame? Is what is that? That is I think what is that? That's 10 a.m. 10. So yeah, this is that candle. This is that time frame, right? So I'm looking at this, right? This is what around the time when I'm setting up for the trade. This is I think this is around the time the news release right here, right? So I would either I will box off the last 30 minutes of price, right? So the last 30 minutes of price is this candle right here up until here. So like I would start at this 10 o'clock candle because that is where price would be at the time, right? My order on this pair, the week low is right here. This is when actual news drop, right? My week low is here. And at around 10, like if the news is dropping at 10:30, or in this case 4:30 a.m., which is here, then I'm in the market at around 4 o'clock at least, and I'm looking to get ready to set up my orders. This first 5-minute candle created a low, right? So I'm gonna go from here, from this low, and put in my pending order. So we say it's around here. This is my stop order. My stop order would go here. My stop order would go here. Let's do a short position. Stop order is here. Right here. And I like I said, I manually add in my I do that manually. So I get my I do my stop loss myself. So I'm measuring down 15 pips from here. So my order would go in somewhere around 137. So let's say 137 right here. So I don't get pulled in the trade unless this pair drops 15 points and then pulls me into the trade. Then on the high side, this would have been my my wick high, right? So I'm measuring from here 15 pips. And since this didn't actually, like this is the 15-minute candle, 10-minute candle right here, I might even use this wick over here just because this is around the same price area. So let's say I use this one and I'm measuring my 15 pips. Let's say 15 is here. Let's say 138, 510, right? So I'm going to have my order here for the high side, right? This is where I'll put that order. And my 20 pips is right here. I'm in for my 20 pips right here. And look, I got plenty of room. I could have actually, I didn't even have to get out at 20 pips. I could have got out of this trade up here. And that is from where I got in. That is 63 pips. Imagine you stacking that with 4 pending orders. You just made you just made 200 and what? I'm sorry for my horrible addition, but you just made what? 240 pips in 5 minutes. on 4 different orders at least, you know, at bare minimum. Here you just made 100 pips right here with 4 orders if you have all of your orders closing out with a 20 pip gain. And as soon as I get pulled in for this, I'm closing out this one right here. As soon as I see that I'm pulled in right here, I'm closing out this. Me set up pending order both ways. Yep, that's right. My buy stops are here. My sell stops are here. These don't get pulled in. These don't get activated. So I know once, all right, price moving up. I already see moving up. I get pulled in right here. 20 pips, 20 pips, 20 pips. This closes out. I got that profit locked in. I usually keep one order for, sometimes I'll put in I'll keep 2 orders in for 20 pips. Then I'll keep 1 order in for 40 pips. So here's another. I got out of the trade again on this wick right here. So that's another 40 pips. So I got 1 order with 40 pips. And then the other one I'll manually close out. I'll like close it out here or, you know, wherever I can get in around here when I actually see the wick turning back down. Or
Would you?
or I would try to stay in and see if I could get this pullback, but the pullback came. It pulled back way too hard. So I probably would have exited out. Like I would have held that one. And when I maybe saw it nearing where I got this 20 pips in right here, I would have probably closed it out right here, you know, because I don't want it to come back down into my profit. You know, I at least want to get 20 pips out of this trade. And once I see it get down probably to about where this wick is right here, I probably would have closed it out. Because what I would have liked to have seen is it hold up here and then go up, you know. But it came all the way back down here, and then it went back up because this was positive news or this was either negative news. This was either negative news for the pair on the right or positive news for the pair on the left. And in this case, GBP had positive news, and it pushed the market up to the direction it was going anyway. So it was already going up. And what I want to actually see is I want to see it hold like here, and then I can just stay in the trade. Or if you want to, you know, still take this trade for a swing trade, or you want to take this trade for like a longer day trade, you could take this. If the pullback holds, you can either stay in that trade and then pull out somewhere up here, or you can take this as the retest right here. This is a retest right here. Retest, broke this support, and then take this buy again. So this actually leads you into a couple of different trades. Like the news breaks up the monotony. It turns the market into the direction that it was going to go anyway. Does it mean you set up pending order both ways? Yep. What counter did you measure or set your stop orders on, and why? So when I set up the pending orders, I look for the most recent high and low. All right. So I look for the wicks that so this broke structure, right? So I wouldn't really deal with this. I wouldn't really mess with this area right here. All of this right here, I wouldn't really mess with that because that broke structure. But structure is here, right? You got structure, consolidation right here. So I have the opportunity to use, if this hasn't happened yet, let's say this hasn't happened. None of this has happened yet. And I'm in the market, and the news release is on this counter, this is 10. And the news release is at 10:30, which is right here. I can use this structure right here, or I can use this. Either way, it just depends on how you want to trade it. But I would probably use this structure. So this would be my wick low right here, and then this would be my wick high right here. And so from this point, from the wick low and from the wick high, I measure my where I'm going to put my pending order. My measure for my wick high would be here. This is up for 14 pips. So that's my wick high. That's where my first order would go for my buy stop. For my sell stop, I use this wick low. So here, I'll set my pending order here. This is roughly 13 pips down. So that's where my sell stops will go. And it matches up because this structure continued to react to this. So this is my 10 o'clock candle, my first 10 o'clock candle. Here's my 10:05 candle. It doesn't break this structure. Here's my 10:10 candle. Still doesn't break structure. This one moves down, doesn't get anywhere near where my sell stop is. You know, this starts to push down at the 10:30 time frame. It starts to push down, but guess what? I'm still not in the order. My orders haven't been pulled. The news release right here, the market's trying to figure out what it's going to do when this news releases, and it finally decides that it wants to push up, right? Finally decides that these orders are just hanging out, chilling. They're not doing anything, but it breaks structure right here. It breaks structure at this 138.35 mark, right? And it pushes up. I'm still not in because the market could go anywhere, but I got 15 pips before it actually pulls me in to decide. So once I finally get pulled into the trade, the market knows where it wants to go at that point. Market says I'm going up, pulls me in, pulls up. Mr. Bank, give me my money. Appreciate you. I got those 20 pips in. And now I can try to see what I can maximize and let my winners run, as it's known, and I let the winners run. So I'm locking in my 20 pips right here. I can hold another trade. I can hold the rest of my pending orders to see if I can get it to the height that it's going to go. But since we already know that it's going to react to the zones, right? We know it's going to react to the zones, so I know I can at least get close to this. So I can hold at least one of my trades until I get near this zone, because I know that based off of our research ahead of time that this reacted from zone to zone. So I know that I can pull out of this trade. At least I can hold this trade at least to the next zone I get to, or the next trend line I get to. Once I'm in profit, once I'm moving in this direction, I'm closing these out so that I don't even need those anymore. Those are closed out. If I got the retest that was, if I got a retest that was in profit still, which would have been likely this candle or maybe this candle, if I was to get the retest, I would actually hold it and see if I can get it to push up through this, push up to here, right? You look for the retest to come somewhere around here at this point right here. And it did actually retest right here. It reacted. It held, actually. It just pushed it down, you know. So many people, you get this move right here because everybody was taking profit on this wick. Everybody was like, when they traded the news, everybody was like, all right, we taking profit anywhere between this 25 pip range right here. They taking profit right here. And it's just driving the price down. But the move is positive. The move is actually positive. So now, once the people that missed this move right here, they're like, okay, once it finds support, I'm going to jump back in. I'm going to jump in for the buy. That's the retest right here. It retests structure right here. Retest this former structure right here, this former support, or this former resistance level that's now support. It retests this, push back up. People saw that it was reaching this zone again, and then they started taking profits right here. But there was a strong this created this swing point over here. Created this swing point right here over here, and it held. So it held over here. You could get back in for the buy on this particular, because the market determine that this news is positive, and it's gonna drive that up. So the goal for me is to take my last. So like I said, I use 4 different buy stop, sell stop orders. And my goal is for that last sell stop is really to not come out here, stay in till I get here, and then hold throughout this. But because this wicked all the way, because the price came all the way down through this would have put me at a negative. I wouldn't have took that drawdown. I don't want the drawdown. I'd rather just get my money. So I probably would have pulled out right around here at this point, right where I took profit on the other pair. So I at least lock in 20 points on this trade on all 4 of my orders, or at least at least on 3 of my orders, and then 1 of my orders I'm pulling out up here. And like I said earlier, I manually take these trades. I don't use a stop on these trades because these trades are so quick. I don't usually take I don't put a stop in, because throughout this candle you'll have fluctuation, like really some fluctuation, and I don't want to put a stop in manually that it was just doing like this and then shooting up. So because I can see I'm sitting in front of my computer managing all 4 of the orders at the same time. So if I see it push up and then start to push down, if it pushes down like maybe 5-10 pips, I'm okay. And because I'm using multiple orders at the same time, I'm okay. I'll if I get kind of leery that it's going to drive down and back down, I'm just going to manually close them out once I see it start wicking. And if it wicks, like say for instance, it takes my 20 out, takes my 20-point stop. I do put in my TPs. I put in my TPs at 20 points or 20 to 30 points, right? I always put my TPs in. But my stops, I look to manage those myself. So after I pull in my 20 pips and I see it start to come down, I'm closing them out manually. That's why I said I recommend taking it from from your computer, from your laptop, because you can close out your orders quicker than using on the phone. I mean, to each his own, because some people don't have laptops. Some people don't, can't use a laptop or for some reason because they're at work or something like that. But if you do use your phone, I probably wouldn't use that many orders because it's too many to try to manage at one time. So, and the reason why, and that goes into the whole reason why I like to find the pairs that have the highest range of movement, because I know that if I have a range between something like GCAD right here, the probability is higher that it'll move those 20 pips because it has the potential to move from 103 pips, as I wrote right here, to 297 pips. So the likelihood that it'll move 220 pips is a lot higher. That moves the odds of your trades up to a higher probability. And that's the way you want to trade. You want to trade based off of probabilities and put yourself in the highest probability that you'll take the trade in the direction that you expected it to go. Or in this case, you don't even really have to know the direction of you're just reacting to what the market does. You're reacting to what the market is telling you to do. Because if the market tells you that it's going to go down, guess what? You're already prepared to handle the market if it goes down. You're already prepared if the market goes up because you have your orders pending and you already have your TPs. You already are managing the trade physically in front of the computer or your phone. So that is what I'm going to be looking for. That's how I like to trade the news. And to me, it is when you have the most movement in the market. Like news, it takes something it takes something strong to break structure. Like right now we're in this channel, right? On this GCAD pair. It's gonna take something to break this structure. It would take something like news, something something in the market to react. And like for the rest of this week, like GBP is in play. So I'm going to be looking at GBP pairs. NZD's in play on Tuesday. And that's how I map out my suggestion if it's valid or makes sense instead of setting pending orders or previous swing highs or lows. I can also support and resistance current price pending order 15 pimp support. I mean, however you see it, however you see it. I just like to use structure structure from recent price action because I'm make the trade off of the 5-minute chart. I just want to see when price breaks structure. And again, in this example here, price structures here. I could add this movement in. This came back into the structure, right? So I see the structures formed here. Got structure here, right? This is prior to price. I see that price broke this structure, but if you look at it when the news comes, price moved back into this structure. So it moved back into that structure. So that's why I base that my 15 to 20 pips off of. But if you saw that you wanted to use it off of previous support resistance, then that's cool too, because this is actually support on the 5-minute chart. This is support right here. This is a swing. This is support right here. Here's resistance right here. We're using that off of the 5-minute. So you could use that off of the 5-minute chart. And you wouldn't be wrong for that either, because it actually lines up to those swing high, those wick high and wick low that I use to put these pending orders in right here. It lines up. You can already see it here on the chart. Here's my structure within support and resistance range, and we got a range of about, what is this, 20 something pips, probably 24 pips. We got a range of 24 pips that we could have used that same concept from. And we're just, like I said, we're just looking for price to break that structure. This movement broke structure, but we're not looking at it this yet. I don't put my orders in until like 20 to 30 minutes before the news drops. That way I can kind of get a clear sense of where my wick high and my wick lows are, and I don't get a fake out, So that way I can see this comes back into structure. And if I looked at another pair, you see the same thing on the pair too. Yeah, so like this on this day reacted to this zone right here, and it moved all the way up to this zone. I would show this one. GCAD, GBP, CAD. The pips we counted in on the previous months, those pips give you the range of possible movement. So the reason why we're looking at those charts and looking at that movement is because we want to know what is the possible range of movement for this pair. So like for GBP Euro, we counted those pips from the previous month so that we can see how far this type of news could push the price of this particular pair. In this case, this particular news release moved the pair between 36 and 188 pips. That's why I said this one was like a B or a C setup, because the range is kind of wide. Like this could move 36 pips or this could move 188 pips. We don't know. So I would trade this, but I would probably, again, like I'm managing my stops higher. I'm managing my stops myself. So I might, soon as I see a sign that this doesn't or may not go the way that I want it to, I would probably get out of this. But the setup that looked cleaner, like an A setup to me, would be GCAD. GCAD had a range of 103 pips to 297 pips. We only need 20 pips. So the likelihood, based off of these past 6 months of reaction to this news, is higher. The probability is higher that these trades will move at least 20 pips in either direction on the day that this type of news is released. So that's the reason for counting the pips from the previous month. We're trying to measure the probability of how the trade is going to move for that day. We could go back a year, 6 months to a year to see this same data on these same news releases on Forex Factory to see how it reacted on that particular day. And on these, for this particular pair, the news caused the reaction of this pair to move very significantly. So we have the opportunity to take advantage of a 20 pip move because we're sure, we're not sure, we're not 100% sure, but it's a higher probability that this will move at least 20 pips because we know it'll move between 103 pips to 297. And the difference between that previous pair, let me pull this back to the daily. On the daily chart, on the daily, on this one, did we mark this one up already? Okay, yeah, on the daily on GBP, JPY, we can see on GBP, JPY, we have a range between 128 and 251. Again, the likelihood of this will be a higher probability because we have the range of movement to be a lot higher on this pair. So this is another A setup for me. It's another A setup because of that. So we got we can't guarantee that it'll move 20 pips, but as the past has shown us, it has a higher likelihood that it will move those 20 pips that we want it to, because that's all we're trying to get is those 20 pips. Cool beans? This is recorded. I will post it, and once it's uploaded, I'll post it. And then if you go on my trading view, I'll publish this too. So that way you can get it too from my trading view as well. So that way you can just come back and look at it if you want to see it. You want to see it and check it out again later on. I'm going to post this link in the group and in Kim's group too. If you're in either one of those groups, I'll post that too. So we'll have it in both. And like I said, you know, that's how I'm trading the rest of the week. I already know. Like, I mapped out how I'm going to trade this week based off of Forex Factory. Like, so Monday.
Are you on news?
Huh?
I said, are you only like doing the news this week, or are you like,
this week? This week, those are my primary trades. Like, those are the main trades I'm going to take. I'll take some other trades too, but like, you know, the ones that I know I can get in real quick are these. Like,
yeah.
And like, because I gotta work, I have to work still. You know, I'm not a full-time trader, but
yeah,
the ones that I know I can get in real quick, those mapped out already. Like, I'm just like, here, Here's money. 4:30 a.m. I'm hopefully up $800 to $1,000 on Monday before I even go to work. When I get off work, here I am in New Zealand, in NZD. When I get off work, hopefully I'm up another 800 to 1,000 on this pair. I got the same thing again on Monday, on Wednesday. I have GBP CAD and JPY pairs. I know I'm going to trade those because, again, we got news on those days. But I'll reconfirm that how those two pairs react to this particular news. This, I think this consumer price index news. Yeah, so I'll go back and reconfirm that how it reacts on these days to this particular news, and which pair reacts the strongest to consumer price index news. Wednesday, USD. Here it is. I can take just GPB pairs, and then I got USD pairs to trade. I can take these. I'll probably only take those two because I can't take this one because I'll be at work. But for sure, Wednesday, got two setups, strong setups on GBP pairs, USD pairs. Then on Thursday, USD pairs. Got those at 8.
Enough picks for the week.
Yeah, already mapped out. Like, I don't have to do nothing but figure out which pair is the best to trade. But I know I have to trade USD pairs because I got news. I got retail sales on USD pairs. I don't know what the chart looks like yet, but because I know the retail sales reactive on these dates, that I got news. I got volatility. And that's all we doing. We trade in volatility, trading how the market moves. Like, this is when the most people are in the market. Then again, guess what we got on Friday? We got GBP pairs again. Retail sales for GBP. Guess who we gonna trade again? We gonna trade GCAD again. We gonna trade GJ again. Because guess who the market telling us to trade this? Like, we don't have to figure out what we got to trade because we already know. And guess what else you can do? Next week, all right, 7:30 on Monday, AUD want to give me some money, but this one, sketchy. This is minute meetings. We don't know how this is going to react. Don't really usually trade those because those don't give you clean setups. No numeric data. This isn't economic data. It's economic data, but it's not a clean setup, right?
Yeah.
You can go back and look at these days and see if it's reactive, see how it reacts. But I don't like that kind of news. I want to see news where I can see quantitative data like unemployment rates. Got to trade unemployment rates. Got to trade wage index. Got to trade that. That's economic data right there. That's actual numbers being released. Then on Wednesday of next week, AUD, employment change. Got to. Anytime you see that kind of news, instantly, that's your money right there. Instantly, like, you got to take those trades. That's money in the bank right there.
Yeah.
Next Thursday, what we got? We got a lot of news. But
you just focus on mainly on the red folders, though.
Huh?
Like I said, you just focus mainly on the red folders. Those are the ones that have the
mainly on the red folders. But I mean, if it's on a day like this Thursday, you got a lot of orange folders. That's like 2 red folders, 3 red folders. We don't know how this is gonna react. But this is manufacturing news. That's another strong economic indicator. We have inflation reports. That's a report. One of those things that I don't really know how to react to too often because it could go any way. But on Monday morning we have durable goods order. That's an economic factor. This is core durable goods, another economic factor. Those are the kind of news releases. Retail sales on Friday, those are strong news releases. So sometimes like this orange folder, retail sales for CAD, that's still strong. You'll still get a reaction. So and then you got the same thing on Sunday, 4:45 when the market opened on NZD pairs. So this is how I've been trading. This is how I like to trade.
Yeah. Okay.
And
No.
I've used a combination of what Kim showed me and just figuring out and making it my own, and making it my own. Put me up 1,500 last week on 100. I had two accounts. One had $100 in it. The other one had $400 in it. And combining those two accounts, I'm up 1,500 from that. So.
And do you find, I guess it's a lot easier to trade on the laptop if you're doing, like, let's say even like two accounts, right? I find that you can close out on the phone.
Yeah. That's why I've done it on the phone, but like, because I use two accounts. So one account I traded off the computer and the other one I traded off the phone. But the one that I traded on the phone, I set all of those orders with hard TPs. I didn't try to let any of those run because I didn't want to try to get in there, try to put the numbers in and put in the stop loss and TPs and stuff like that. I just kind of closed those out as soon as I saw them and reached the profit amount that I wanted to get to.
Yeah, no, makes sense.
Yeah, because it's hard to trade it on the phone like this because it's so quick. Like these trades are only lasting like 5 minutes,
Yeah, like 5 minutes tops. Like GBP the last time was real quick. Like you blink and it's done.
Right. So I can't see myself trying to close out 4 trades on GBP pairs on a phone. It can be done though. It can be done, but it's just not. It's not gonna. I can't do it.
Yeah, no, for sure.
Yeah, I think Cameron, my friend Cameron, he does it from his phone, but he instead of using 4 orders, he's only using like 2.
Okay, yeah, that makes sense. Yeah, two is a little bit easier because that's what I did the last GB pair news. I did 2 orders. That was like, even with the 2, I still found it a little bit hard to close. Like they both obviously close on different times, but I don't know how you'd be able to manage 4 off the phone.
Right. Yeah, I managed 4 on the phone, but like I said, I closed them out myself.
Yeah.
I didn't try to like do anything crazy because it's just too hard for me to do it. So, but yeah, like this has been like really, really strong for me to take these news trades the way that I've been taking them, and like they're quick, they're fast. I don't have to worry about taking being in the market that long. I can get in real quick, maximize profit, and get out. And I don't have to sit around. It puts you, if it trades exactly the way it's supposed to go, it can actually put you in a swing trade. You can actually get pushed into the longer term trade too, because the news breaks the market structure. It breaks the structure and puts it in the direction that it was gonna go anyway. It was already gonna go up. So
usually, like let's say when we get news, right? How often does it usually correct? Like,
that's what I'm saying. That's what I'm saying. When you get in if you get into some of these trades, it corrects the market and pushes it into the direction that it was going to go. And in most cases, you'll get that first initial impulse, push the market up or down.
Yeah.
Then you'll get the pullback. And the pullback is usually where the market will start to go in the direction that it was supposed to go.
Oh, okay.
After that pullback, like here on GBP, GBP, where are we? We're looking at that 5 minute. GBP. So on this day, right? We consolidated, right? We had this break. It was actually pushing down, and then we got this news. It pushed the market up, and it's been going up ever since then. So, like,
Yeah.
if I wanted to, outside of this particular day when the market like broke structure right here, I could have stayed in this trade all the way up until this day probably, because even on this day it did open and push up, and I could have got out right here. 2 days, what is this? One could have been in this trade for one day, 2 days, 3 days, and I would have got out. That's on that same news. I could have been in that trade this whole time.
Yeah.
And if I'm stacking my orders and compounding my orders, I know I could have got back in right there and just kept going up. You just never know how that's gonna go. This trade, I could have got in this trade, stayed in this trade for 2 days because I got the move here on the 10th. Then I got the next move down on the 11th, and I'm still in this trade for this time. I'm in for a total of 185 pips, and I don't get pulled out of the trade until the 13th on this day when I get this bullish candle right here.
Yeah.
Same thing on this one. This trade, I'm in it on this day on the 9th. And then that sends the market down. I can stay in this trade for when it breaks the structure all the way down here. That's 230 pips. I don't get pulled out until the next day until this green candle. Or depending on where I got in, if I want to still hold it, I could have rolled it and held it through this one and just still be in the trade. It just depends on how much capital you got.
Yeah. Okay.
This one would have only been a 1 day trade because you would have got wicked out on this one because that didn't really move. That moved the next day. But this one on the 7th, on the 10th, you in it for what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. You could have been in this trade for 10 days based off of this news, and you would be looking at.
I'll try it.
And then you just trail it each day, and then each day.
Each day. Yeah, that's 647 pips.
Basically, what he does is he sets his orders.
That's 640 pips. Man, I use a 0.5, so that's $5 per pip.
Okay, and then is that on your $100 account, or
Yeah,
is that 400?
that's on both of them.
Oh, okay. But then if you, like, let's say, that's what I was asking you the last time. Let's say you do set, like, let's say you have $100 and you do set 0.5.
Mm-hmm.
Are you able to still do 4 pending orders?
Yeah.
Oh, really? Okay.
Yep. Yep.
And what broker are you with?
Hugo's.
Do you find Hugo's is the best broker to?
I don't have nothing to compare it to.
Because I started using CoinEx. I found that CoinEx, the only thing that I don't like about CoinEx, there's no US30, there's no crypto, but like you get in profit like a lot quicker, I find, like opposed to the Hugo. Like when I set my my trades on CoinEx, I'll be in profit. On Hugo's, I'll be working my way into profit.
Yeah, I don't have anything to compare it to because I used Hugo's way from the beginning.
Okay.
I have some other brokers, but I don't really trade with those too much. I got TD Ameritrade, but I only trade stock in those. So
You trade stock after?
I trade stocks. Yeah, I trade stocks and forex.
Oh, okay.
But all right, man.
Great session, man.
I recorded it too. So
Quick question.
What's up?
You know when you said you set your pending orders 15 pips above or below the swing highs and the swing low. What's the reason for the 15 pips?
To keep myself from getting pulled into the trade unless it breaks structure.
Okay.
Like in order for me to pull into the trade, the price has to move in the direction. So if it's going to go down, it's got to come down at least 15 points to pull me into the point. Or if it's going to go up, I'll do the same thing. It's going to break the structure. I'm setting my orders above the structure near where the price is at the.
Okay.
Yep.
Yeah, good. Great session today. I think we should do this more often before and after the news.
I always do this on Sunday at 11.
Oh, is it?
Yeah. I got a little small group with a couple people that
Okay.
that I'm cool with. And on Sunday mornings we jump in on this same thing.
Oh, okay. That's nice. Because when you posted it on the other Telegram, I looked at it, but I couldn't figure out what you were saying. So that's why I met you.
Yeah, just send me a message and I'll put you in there too. I'll add you to it.
All right, that'll be very grateful.
But I post any kind of news setup in both of the chats.
Okay.
I post those in both ones, so that way it's because I learned it from him, but I just kind of added some stuff to it to make it my own, and then that's how I've been trading it. So I usually post them both.
Okay. Great session today. Great. I learned a lot today.
Appreciate it, man. Appreciate it, man. Nadine, she's been in the group. She just be something.
What was that, Corey?
I say Nadine in the group too, but she just.
I'm here. Do you know, I had to come out my son came in the room, and I know you're recording, so
yeah.
I kind of come out and then come back in. But I did watch majority of the session, so thank you so much.
No problem. Send me a message on Telegram, and I'll add you into it. How do you say it? Kidnap?
Yeah.
All right. Just send me a message on Telegram, and I'll throw you in there.
All right. Thanks so much.
All right. And I'll put the YouTube link in there too.
Okay. Okay. Great.
All right, man. You guys have a good one.
All right. Thank you very much.
Thank you.